Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-magd.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell, the pound or yen. Very, very important, okay? The title of this video is how to trade, the British pound, Japanese yen, a currency pair. How to trade a pound yen, a currency pair, all right? Now, before we continue, I want to tell traders that anytime we are trading, we are using a 3 market pattern. 1, 2, 3, okay? So the first market pattern is the rising channel. If the price is in a rising channel, the price might display higher lows and higher highs. But if the price is in a rising channel, all right, and the price did not display a new higher high before a new higher low, we will put a question mark, okay, on that bullish momentum, because sometimes traders get into trouble because they think that the price is in a rising channel. But if the price is in a rising channel and failed to display a new higher high, that's the key element. Every bullish signal after that, failure, we need to take it with a very, very, high, caution. Very important, all right? On the other hand, if the price is in a declining channel, the price might display lower lows and lower high until the price fails to display a new lower low. If the price fails to display a new lower low before we receive another sell signal, though the price is still in a declining channel, we need to be careful because it has failed to display a new lower low before we receive another sell signal in a declining channel. But it doesn't mean that the price cannot go down more, but we need to be very careful. There are 3 market patterns: the rising channel, the declining channel, and the horizontal channel. Now, recently a trader asked me about which time frame I use. I use all time frames. Now, that was a difficult question because I don't know how to answer this question to a trader. I use all time frame because we use I'll start from the yearly chart. Because we are looking at, for instance, here we are trading the pound yen. I want to see the whole, a picture, the bigger picture. The bigger picture here is the yearly chart. I will go to the quarterly chart, weekly chart, monthly chart. But when we are about to enter the trade, we use what we call, a trading drill. We look for a bullish setup or a bearish setup. Then we go to our signal time frame, and then we look for, a low risk entry point. I use myself TSTW24 for day trading, as a TSTW008 for swing trading. I use all sorts of trading methods. So the time frame, what I want to mention to this particular trader is that the time frame is not the most important thing. The most important thing is the 3 market pattern. But when we are looking for the market pattern, we want to start from a higher time frame. Doesn't matter. Can be 4-hour chart, can be daily chart, can be weekly chart, can be, yearly chart. But it's better to see the whole picture because when you are looking at a financial instrument on a 5-minute chart, that's a point of view. So you are looking at the chart, and you want to know what is happening now. Anytime you're on a lower time frame, you want to know what is happening now. If you want to know what has happened few hours ago, you can go to the hourly chart, 2-hour chart, or 4-hour chart. If you want to know what has happened, a few days ago, you can go to the daily chart or weekly chart. All right? If you want to know what has happened a few weeks ago, you can go to the weekly and monthly charts, and so on and so on. If you want to know what has happened a few months ago, you can go to the monthly chart, quarterly chart, All right? So this is about a point of view, where you are looking. So you go to a football match where you are sitting, if you can see the whole pitch, all you can see, that's your point of view. So the 5-minute chart is a point of view, the 50-minute chart is a point of view of the same financial instrument. But we want to look at the price from different angles, if that makes sense. The same thing I'm doing all the time, so I use all time frame, okay? Now, we talk about the definition of the uptrend and the downtrend for the pound yen. Let's get started. We see that the yearly chart, the price is below the high of last year. The high of last year is at 174.54. Because the price did not display a new high this year, 2014, so far, we will put a question mark on this bullish momentum that was taking place in 2013. So, from this point onward, I say to traders, priority to bearish signal only. But when we receive a buy signal, doesn't mean that the price cannot go up, okay? If you receive a buy signal, we need to be very smart, very cautious, very prudent, okay? And try to be very careful because it's still below the high of last year, all right? So 3 key levels traders must pay attention to, traders that are following us, because the purpose of this video is to show traders how to trade so they can know exactly what to do themselves whenever they are trading in a financial instrument. So I use the same method almost all the time to show traders how to analyze a financial instrument. My approach is very simple. I combine the technical with the fundamental, paying attention to the economy news at forexfactory.com. So 3 key levels here on the yearly chart: the low of 2013, the high of 2013, and the median line of 2013, which is the 50% Fibonacci retracement level. The median line, the middle line of the range of 2013. I want to go a bit fast today. 1 second, please. Okay, so the green line is the median line of 2013. So if the price is going down from the high of last year, it will try to find supports, okay, near the psychological price level, which is the 50% Fibonacci retracement level. This is how professional trading. So though they are bearish, they're giving priority to sell signal. If the price approaching the green line, they are careful because they know that it's a psychological price level, which is dividing this range into 2 zones, the bullish zone above and the bearish zone below. So if it comes near the 50% level, we will wait for it to dip below it, to retest it, before if it finds a resistance, we'll continue to sell it down. But if you find a support here, it can go back up or even oscillate between the high and the median line. So we want to know where is the high, and the exact level for the high of last year is 174.54. Note it down like professional trader. Know it. If you trade this pair all the time, know it. The median line is in a zone, not exact level, in a zone of 156.57, 156.57. The low of last year, 2013, is at 137.83, 137.83. These 3 levels, traders must know it and pay attention to them. Sometimes you may see a bullish setup or a bearish setup around this key level. As long as the price remains below the high of last year, it's bearish. If we want to give priority to bullish signal, the price must display a new higher high, go above the high of 2013, and okay, pull back to retest it to confirm it as a support level. It's not sufficient for the price to go above the high. It's very important. It's essential that the price confirm that level as a support level, or at least the price start displaying a new higher low above the high of last year. It makes sense. Yeah, this is about how to trade and know exactly what is taking place so we don't make a wrong decision and go round. Okay, so these are the key levels. Today, I will not talk about the short-term equilibrium price level or the long-term equilibrium price level for this currency pair. Why? Because this currency pair is quite difficult to trade, and I do not recommend this pair to new traders. If you are a new trader and you are struggling, do not trade the pound yen. This currency pair is more for advanced traders, traders that have more experience and know how to manage their risk and have excellent money management in place. This is a very serious warning for traders that have difficulties to trade the forex market. Do not trade the pound yen if you don't have, okay, a proper track record. I need to say this. It's very important, all right? You must manage the trade carefully. You must use money management in excellent money management place. Put an excellent money management place, okay, and know exactly what's taking place. Do not fight the pound yen. It's quite difficult to trade sometimes for some traders. But I'm showing you here some of the level you must watch. If you want to know more about the critical price level for this pair, you need to go to, okay, articlebase.com, www.articlebase.com, and look for the article that we call Trading Critical Price Level, the 6th critical price level. Now, when you have access to that article, you will know how to calculate, okay, the 6th critical price level, and you can calculate the 6th critical price level for this currency pair. Let's move on. All right. So today we didn't say anything about the short-term equilibrium price level or the long-term equilibrium price level. So my apology for traders. I may have to put it on Google Plus or Facebook for traders. Okay. All right. Now let's go to the. Before I move on, I want to highlight another thing for trader, another level that trader must watch if they are trading this pair. Is the media line of the year 2008, the media line of 2008 is in a zone of, well, how is my drawing today? Okay. Okay, is in a zone of 17281. So that level is near is near the zone of the high of last year. Okay. So another level that trader must remember is the median line of the year 2008. That level is at 17281. Note it down. It's a psychological price level. 50% Fibonacci retracement level of the year, okay, 2008. Right? I will color that line in orange. A very, very important psychological price level. In the zone of 17281. Do not forget it. If you want to be bullish, allow it to go above that level. All right? Let me remove my Fibonacci drawing tool on this chart. Okay, so we have highlighted 4 key levels: the high of last year, the median line of last year, and the low of last year. Now we are adding another key level, very, very important key level, the median line of 2008. Why? Because 2008 was the year of the financial crisis, okay, a bearish year that has shaken the financial market big time. The median line of that year is a very, very important key level. In fact, you can go, whether you trade stock or commodity, look for the year 2000, if you can see the yearly chart, highlight, okay, the high, the low, and the median line of 2008. And pay attention for the median line of 2008. It's a very, very important psychological price level. So when we are trading the pound yen, we are comparing, okay, the economy of Great Britain to the economy of Japan, all right, yes or no? So Japan went through all sorts of problems, and their government, the previous government was a bit sluggish, so to speak, a bit too slow to make decisions, and things went upside down. Now they are fighting to raise up their inflation. So the economy is still, they need to, they're supposed to be pumping money into the economy and help the economy. They haven't done it, and the economy went through trouble. In Great Britain, as I said to you before, this economy is resilient, and it's just something traders need to know. The pound is resilient. All right, very simple. So let's move on. So we go now to, we are comparing the economy in Great Britain to the economy of Japan. Decisions that are made by the Bank of England, okay, and the Bank of Japan, okay, the central bank's decision will affect this currency pair. Okay, the unemployment rate in Great Britain or in Japan will affect this currency pair. All right, the money supply data will affect this currency pair both in England and also in Japan. So that's why I always refer traders back to the Forex factory where all these economy news are listed. So do not trade the pound yen if you don't want to know what's happening in Japan. All right, if you don't want to know what's happening in Great Britain or in the United Kingdom here. All right, you must know what is happening. If there are economy news, high impact economy news that are due in Great Britain, when you are trading this currency pair, you want to know. If there are late night, especially in London, around 2 a.m. when Hong Kong is open, or at midnight in London when, Tokyo is open, some major economy news are released late in the night. So if you are swing trading while you are sleeping, some major economy news can mess up your trade or change the dynamics of the market. So you need to be aware of it and weigh all the risks, whether you want to be part of it, whether you want to stay out, or how you want to control it, whether you want to have a hedging position, all right, whether you want to, minimize your risk. This is crucial for Forex trading, all right? So when we are talking about the pound-yen currency pair, we are comparing two currencies, the British sterling pound and the Japanese yen. That's what we are doing. So if things are getting good in Great Britain, the pound will be strengthening. If things are getting very good in Japan, the yen will be strengthening. Another thing I need to say to traders about the yen is that when you see the global economy is going down, people like to buy the yen, all right? Because the Japanese save a lot of money and their money supply is quite high. Their saving is quite high. People would like to, instead of buying gold, some market participant will buy yen, so they will transfer their wealth from other currency into the yen. This is what was happening, during the 2008 when the every currency pair was you can see here, 2008, the pound fell against the yen because the yen was strengthening. Why? Because during that time, the global economy was bearish, so the money supply was moving, the investor or the money manager or the asset manager were moving, the fund from, the pound into the yen. So the yen is a very important currencies that traders must pay attention to, because when things are getting very bad, like gold, people will transfer their wealth into the yen. But that is due to change, but I don't want to go deeply into this. In the next decade, we will see that there will be a bit of change in Japan, but we will see how this will play. But for now, this is what traders must understand. If things are getting very good, as it has improving now, you see in Great Britain the economy is improving, United States the economy is improving a little bit, all right? The money supply is coming out of the yen again back into other currencies. Critical for traders to know that, all right? Let's go to the monthly chart. So what did I say to you? I said to you that all the first thing we are paying attention to is the market pattern. It's not about the time frame alone. All right? So we on the monthly chart. It's a monthly chart. It's a viewpoint. So this is a pound yen. This is another viewpoint. So on the yearly chart, we had this viewpoint. That's what we can see. That's our viewpoint. Where we are now, that's all we can see. That's the picture that we can see. If you go to the monthly chart, we have another viewpoint. It makes sense? All right? From your binocular, okay? But when we are on the time frame, what do you look for? Traders look for all sorts of things. The first thing you must look for is the market pattern. You want to know the market pattern. On the monthly chart, we have a rising channel. So, all right? We have a rising channel starting out that the bullish momentum is, the market is bullish. It's telling us the market is bullish. This is one information, all right? Talking about multi-talented trading. There's another information that we had on the yearly chart. Which information we have on the yearly chart? On the yearly chart, we see that the price did not display a new higher high. So you remember what I said to you? Though we are in a rising channel like this, the market pattern is bullish, the price has failed to display a new higher high on the yearly chart because 2013, that candle is now closed. So we have one information here that George, the price is below the high of last year prior to bearish signal. That's a viewpoint. Great. We highlight the high, the low, the median line of 2013, and also the median line of 2008. That's one viewpoint. We went to the next viewpoint, which is the monthly chart. This is what we see now. Now we can draw a channel. Okay, the channel is bullish. We can't deny it. We don't want to fight. So the market pattern is bullish. But with the information that we have, a conflicting information, which one do we prioritize? We prioritize the definition of the uptrend. Yes, the price in a rising channel, but the yearly chart failed to display a new high. We will, yes, still, though it's in a rising channel like this, it has failed to display a new high. Still, priority to bearish signal. But, repeat, but we cannot sell inside the rising channel. If we are doing that, yes, we can sell at one point. The only point we can try to sell, which is a bit risky, is the median line here. So we allow it to rise near the median line. Okay. And we will receive a sell signal there. We will take it. But we will follow the trading. That will be a setup. Okay. Then we will go to the signal time frame. And then we go to the entry time frame. Sometimes traders ask me some questions which I cannot answer because some of the questions I cannot talk about TSTW24 trading method if you're not TSTW24 trader. I cannot tell traders about the TSTW-SY008 trading system if you're not TSTW-SY008 trader. I can't do that. That would be unfair on these traders who have purchased it. Okay. So all I can say is that here, if you want to sell in a rising channel, you want to be very careful. But if you come near the median line here and repeat, and we receive a sell signal, a valid sell signal, that will be a bearish setup. Now we go to the signal time frame. We receive a signal, then we look for a low risk entry point on the entry time frame. This is about the top-down trading method. Okay? The setup, the signal, and the low risk entry point, the setup from the higher time frame. Okay, so here we are in a decline. The most patient traders that are very patient, they wait because they don't want to lose. They don't want to lose. They hate to lose. They just wait. They will allow the price to come out of the bearish channel, telling us that the bearish momentum is diminishing. All right. And to retest the base of the rising channel. So break below, retest, and turn around. So if sometimes the price will not retest the channel, you retest another resistance level somewhere here. So if you break below and retest this level, and we receive a sell signal, we will be happy to trade it. But we don't enter the trade on the yearly chart, on the weekly chart, on the daily chart. We enter the trade on the signal time frame. All right. So the setup should be on a different time frame, the signal on a different time frame, and the entry on a different time frame. All right. If you are a day trader and you are wondering, George, what this is about the top-down trading method, I have recently posted a video, tutorial on our website. Go to www.stochasticmagic.com and click on day trading. I show traders how to use a multiple time frame trading method to trade on the 4-hour chart and also on the hourly chart. Click here, day trading. Okay, I'll click on it and I will show you the videos that you can go and watch if it makes sense to you, and you look at it. All right. Okay. So I'll come back to the website soon as it's loading there. All right. So you see now, so on the yearly chart, we have one information. On the monthly chart, that's what we see. Let's go now to the weekly chart. All right. On the weekly chart, again, the same channel that we had on the monthly chart is still valid here. The price is still in a rising channel, but it's riding at the lower point of, on the lower part of the rising channel. This is the upper part of the rising channel. And this section here, this is the lower part of the rising channel. The median line of the channel is dividing the channel into two zones. Very bullish zone on the upper side and just bullish below, because though it's still the channel is still rising, it's still bullish to a certain degree, but the price has failed to display a new high. So we will put a question mark on this bullish progression. All right. So priority to short signal if you receive a valid short signal on the edge. All right. Okay. There are some spammers activity here. So I'll close that window. All right. So this is one thing I want traders to pay attention to, because sometimes traders will get into trouble because they think that they should, they look at the market patterns, but they don't pay attention to the definition of the uptrend or the downtrend. So you see a rising channel, the price might display higher lows and higher high. Okay, this is very, very important that traders, okay, pay attention to that. Okay. All right. Okay. Now I'm not going to go back to these windows again, because it looks like something funny here taking place. All right. So we go to www.stochasticmoney.com, click on the day trading, and check the video about the 4-hour chart and also the hourly chart. Okay. All right. It makes sense. Is also powerful. Okay. Now let's go to that's a viewpoint on a weekly chart. Same thing. Okay, rising channel. The price has failed to display a new high. Okay, the same thing I've said to you on the All right. On the monthly chart. Remember the key level that we have highlighted on the yearly chart. If the price is going down from the high of last year, the price is trying to find a support somewhere near the median line, okay, of last year. The price is approaching that median line. We need to be careful. If there is something you do not understand in this video, you can go back, okay, watch the video again. Now, we want to know what has happened, okay, few hours ago, all right? So we are now on the 4-hour chart. What we are trying to do, we want to see the recent price stretches. Okay, that's what we are trying to do. So I'm going to remove all my drawing from the previous chart. Okay, so we can draw a new, okay, market pattern. What is happening now? All right. You see here the orange line here. All right, that's the line that we draw from the yearly chart. All right. You see how the price, this is the median line is in the zone of the median line. The exact level is at 17281. All right. So you see how the price was acknowledging the psychological price level of 2008. This is, you see, recently how the price was bumping, gee, wow. Here, you see, now we have a triangle. Here you see it. You see a triangle. The triangle here, okay, this is, okay, you have a higher lows, but equal high here. Equal high, higher lows, but equal high. If you want to be bullish, you will allow the price to go above the orange line, the zone here, 17281. I don't want to quote this code number. That's what I'm saying to you, the exact level, 17281, goes above it and find a support break above, retest, turn around. Then we can look for opportunity to buy. The next key level will be the high of last year in the zone of 174 something, okay? All right? So you see, it's traders, professionals are just selling. They know that it didn't display the new high, they were just selling. They were here, they sell it here, it come down. People push it up, they sold it down, it come back again, they sold it down, it come near, they sold it down. Here they sold it down, they sold it down. What's happening now? So on a 4-hour chart where we are now, that's another viewpoint. Now we see a triangle on a 4-hour chart. If you want to sell it on the 4-hour chart, allow it to come back and retest it here. Break below, come back, retest, and turn around. If it break below and retest this level, all right, we can go to www.stochasticmarket.com, watch the video that we call, click on the webpage, day trading, check the video about the multiple time frame trading of the 4-hour chart, how to combine the 4-hour chart and the 50-minute chart. That's something free you can use. Okay, CSTW24 traders know how to do, what to do. All right. You see now? So if next week, for instance, all right, we come back down more and retest this level on the edge, that's a low risk entry point. We'll use a multiple time frame trading for day trading and I take it from here. It makes sense? It's also powerful. On the other hand, people, that's what I say to traders, do not assume anything. It goes above it, this is the orange line, okay, and find a support above it, and start going up, all right? Be careful, because why? Even if you are taking a bullish signal, be careful. It may go up for a while, only to come back down. But if it did below this trend line here, and then find a resistance here, where is the next target? Do you know? This is what I say to traders. Always when you enter a trend, you must set a target. So you see the triangle here, this the height of this triangle. You drop it down, the target, we put it here, right here. Ultimate target, somewhere here. Price can go down. I will be very conservative up to the zone of 164.68. That will be the target. If it come out of this triangle and find a resistance here, boom, can come all the way here in the zone of 163. Okay, all right. Now, always follow the market pattern and okay, trade like professional trading. We can use use a trend line, use pitchfork tools. Okay, trade on the edge. So from the yearly chart, we go to the monthly chart. From the monthly chart, we went to the weekly chart. Now we are the 4-hour chart. As always, in order to achieve consistent winning trade, traders must use the trading drill. A setup is not a signal. A signal is not entry point. We need to understand that. The setup must take place on a higher time frame. And when we are looking at the higher time frame, what are we looking for? We are looking for a market pattern. Here on the 4-hour chart, though the price displaying higher lows, it's not displaying a new higher high. It's flat, equal high, equal high, equal high. Tell you that be careful, though it's displaying higher low, we are not having a new higher high. For a bullish market pattern, the most important thing we are paying attention to is a new higher high. For a bearish market pattern, the most important thing we are looking for is a new lower low. If you don't have a new lower low in a declining channel and we are selling, we need to be careful. When we are trading the pound yen, we are comparing the economy of Great Britain to the economy of Japan. We are comparing the British pound to the Japanese yen. The fundamental that govern the yen, which I explained to you, transfer of funds, will influence these pairs, okay? The economy decision made by the central banks in Great Britain, the Bank of England, the Bank of Japan, will influence this pair, all right? Very, very important. The market cycle of Japan went through a deflationary period, was bearish for some time. It's not going to be too bearish, but right now, what is happening, people are expecting, okay, the dollar to go up against the yen. People are expecting the pound to go up against the yen, but it may be a little bit too early. In my view, I think we need to wait until 2016 before we may see a bit of change. But right now, with all we have seen so far, okay, it looks to me that the yen will continue to strengthen, okay, for a few more year before we see a bit of change. That's the current picture because we did not see a new high, okay, this year. So far, okay? We will see. Maybe it will change later on, but so far it did not change. All right? As I explained to trader at the beginning of this video, if one is a new trader or a beginner trading this pound yen, you may decide to stay away from it, okay? Very important. Do not forget that, okay? It's difficult to trade pound yen. It's very volatile, okay? Very, very volatile. And the price can move fast against traders. Traders must control their risk and trade on your edge. Look for the best setup if they use, okay, excellent money management and control it, okay? If you want to become expert of this pair, you need to, okay, paper trading, demo account. You open a demo account with your broker, trade it if you like it. It moves fast, okay? Which means if you are right, you can get paid big time fast. 100 pips very fast, 50 pips very fast. But if you want to do it, train yourself, practice will make you better. Do not use real money, use a demo account and work on your ability to trade. And as I show you now, I show you the roadmap. Like you want to navigate through this messy market, the high of last year, the median of last year, and the low of last year. I also recommend to you to go to articlebase.com or go to Google, type in the article that we call Trading the 6 critical price level. You will see article written by myself, and you can calculate the 6 critical price level. So which means you want to take value signal around key levels where professionals are making decisions. You see here on the yearly chart, this level that we have drawn, how professionals are making decisions around this key level because the price has failed to display new high on the yearly chart. They know this median line of 2008, this is the median line of 2008, and this is a psychological price level, a line that is a team dividing line between the bullish zone and the bearish zone for 2008, and they are just selling. Priority to sell signal, you see? Priority to sell signal, priority to sell signal, priority to sell signal, priority to sell signal. You come back down, don't chase it when it's going down. If you want to sell, the price must go up first. You see here, they are waiting, okay? They wait for it. Rise near low risk entry point, receive a sell signal, sell. If you want to buy, the price must go down fast. Don't force it. Don't chase it when it's going up. Allow it to, if you want to buy, allow it to go down. You want to buy cheap, buy low, sell high. This is the end of this tutorial. I hope you have learned something from the video about how to trade a pound yen, and we'll put into use, okay, to make excellent trading, day trading, swing trading, and investment decision. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.